in recent years, the garbage lending has not gone to the public markets. The garbage lending has gone to these private markets. And private credit has been very popular and is now increasingly been over-allocated to by large asset pools.
That was Double Line Capital founder Jeffrey Gunla weighing in on this outlook for private credit, right? We're seeing these cracks emerging. We're also shining the spotlight on Australia, where the corporate regulator there is threatening tougher legal action against private credit funds that fail to protect investors. The crackdown on this fast-growing industry follows high-profile collapses in the U.S., including auto loan financier Tricolor Holdings. And we have some analysis from our colleagues on this.
Bloomberg Intelligence senior industry analyst Matt Ingram joins us now from Sydney with more on this. So first of all, Matt, set the scene for us. What's the scale of private credit in Australia, and what are some of the risks that the regulator wants to address?
Yeah, hi. It's a great place to start. The question is, has the horse already bolted, and are we just shutting the gate too late? It's already a $200 billion industry here in Australia. There are two predominant risks that the regulator has identified in its report. The first is, how are we taking account of collateral and how are we properly disclosing the credit risk for investors? The other big concern is, are these operators of these funds passing on the substantial yields that they're earning from the borrowers? So are we getting a good risk-reward return for those retail investors, I guess, is the big question. And are they actually aware of the risks that they're taking on?
Yeah, so really this protection, or the idea of protecting retail investors, but when it comes to the bigger players that are already in this space, including the listed players, how much exposure is there to private credit?
It's a tough one to answer. We know that Macquarie now has about 70% of its shareholders' equity tied up in private credit assets. The credit quality of that book to date's been very good. They did make a write-off when they reported results in March. But that business has grown very fast. No credit issues yet, but it's a big exposure. One of the interesting exposures is Judo Bank, one of the smaller lenders. They've recently opened a warehouse financing facility looking at private credit, helping finance non-bank financials. So that might be one to watch. Again, no credit issues for Judo either, but that's a relatively new business with a very big opportunity. So potential credit issues there as well.
The industry super funds also biggest holders of retail assets. What does their exposure look like?
This is one of the murky things that the regulator's trying to sort out. Disclosure is not great as terms of where these assets sit. They set in fixed income. We've talked previously about the super funds really ramping up their equity exposure. So on the face of it, they're not going deep into private credit. The nuts and bolts of that's one of the ones that I think the regulator would like to unpick. How do we disclose what assets these super funds are holding in terms of private credit exposure so that their investors know what they're on the hook for?
Bloomberg Intelligence senior industry analyst Matt Ingram there with that insight into Australia's private markets. We have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong.
And you can also tune into the Bloomberg Australia podcast that delves deeper into the biggest stories shaping the country's role in global business. Find that on Apple, Spotify, or Bloomberg.com.